Let's bring in Feroze Azeez, Deputy CEO with Anand Rathi Wealth, joining us this morning from Mumbai. Good morning to you. So we are looking at the China market this morning. Some pretty uncertain situation at the moment since China rolled out a series of stimulus policies to spur growth. Property transaction volumes actually grew higher in the first stage, in the first week or so, but later on we are seeing that transaction volume getting lower again. So judging by the current situation, do you think that China's GDP growth target of 5% is achievable for this year? Given the fact that we only have like 3 months, less than 3 months left until the end of 2023.
Good morning, Henry. Thanks for having me on your show. I personally think that the 5% target is difficult to achieve for the GDP of China. Of course, the real estate sector, like you rightly pointed out, again, was a small little blip on the upper side, but I think YTD it's degrown by about 8.5%. I think that'll definitely impact the possibility because the stimulus from an interest rate standpoint has not helped as much the whole economic revival. So to our mind, 5% is an uphill task and would be very difficult to achieve. I think about 3.8 to 4% GDP growth for China is what is expected for the calendar year.
Mm-hmm. And also, I want to get your take on the future trend of the Chinese renminbi. We've seen days of renminbi appreciation following PBOC's stern warning of currency speculation. So how do you see the future trend of the yuan?
We look at a depreciation in the yuan, but I personally think that the kind of economic inflows you have on the currency side, like you rightly pointed out, the speculation has been met with some stern warnings. We think that there's a depreciation possible of about 2 to 3% over this in this calendar year.
Mm-hmm. And over in India, inflation cools down slightly from its 15-month high. We've just seen the figures released. Will this change the stance of India's central banks on its monetary policy in the future?
If you look at the inflation numbers, they've come down from 7.4% to 6.83 just now. The inflation target for the RBI is about 4 to 6%. I think the vegetable prices have risen by about 26%, which is a concern. The cereal prices are up about 12%. So I think it'll be elevated for a couple of more months. I don't see a requirement of a monetary policy stance change yet because vegetable prices inflation is not as sticky as the rest of them. I think that will come down in control. So 6.83 is not in the realm of comfort for RBI, but I think it's not good enough for a change in stance. And I think the interest rate cycle up move may be unlikely. I think it'll very largely depend on the September inflation numbers. I think vegetable prices inflation from 26%, which is very, very high, I think can come under control. If it doesn't, then of course there could be another rate hike cycle.
Mm-hmm. And also looking at India's stock market, it's actually a bright spot given the situation across the Asia-Pacific region. We're seeing that Nifty 50 reached its all-time high on Monday. So what's driving the sentiment over there?
I think the economic factors are good. The liquidity is good. We got about 25,000 crores from the FIIs in the last month of August. In the first few days of this month, which is September, also we've seen some decent inflows. 0.2, 0.3. We of course on 11th of September it hit peak, and I think FII inflows were about 1,400 crores in Indian rupees and about 336 on the domestic side. The inflows have been robust. 0.1. From an economic standpoint, the inflation number cooling off has helped the sentiment. Of course, on the GDP side, the 7.8% GDP for the first quarter almost brings in certainty to the 6.2% target. On the sides of GST collection is about 11% up, 1.59 lakh crores. I think GST really well speaks about the economic revival on the ground, and I think these are the factors. Apart from this, I think the inflows for the residual period on the domestic sides are going to be good. The mutual fund industry on the equity mutual fund side has seen very robust inflows. We saw about 20,000 crores Indian rupees of inflow in equity mutual funds alone, which is little over $2 billion, which has revived from it's been one of the highest for this calendar year. I think inflows, great economic data. Earnings have grown up by about 18% for the first quarter on the Nifty 50 stocks. And I think the earnings number of Nifty of 940 rupees per piece of Nifty for this financial year seems very likely. And this has already been factored in. Of course, the valuations are a little stretched, but I think 20,000 Nifty is because of all these factors which have played out.
Right, Mr. Aziz, a very quick question before we go. Investors are closely watching the US CPI report coming out later tonight. So how do you think the potential possibility of another Fed rate hike to affect the Indian stock market?
Yes, Henry, like you said, there's some degree of nervousness. That's why you would see yesterday mid caps and small caps have corrected significantly. Of course, there was some also an outflow from one of the SPIs that resulted in an underperformance in the mid cap and small cap indices vis-a-vis Nifty in one single day of about 3% which is the highest for the last 1 year in terms of divergence between the broader market and Nifty. I think the nervousness is kicking in because the small cap and mid cap outperformance was about 10-12% for this financial year, and that's what worries me. I think the rate hike on the US side will definitely have flight of capital from the broader market to the larger names like the Nifty 50 stocks.
All right, Mr. Aziz, thank you so much indeed for your analysis. As always, Feroze Azeez, Deputy CEO with Anand Rathi Wealth.